Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Real estate investment trusts, or REITs for short, have been one of the hardest hit sectors since Federal Reserve has begun raising rates and holding its rate at decade high. There were concerns that tenants couldn't pay their rent or could default. Higher interest rates also make it more expensive to borrow and service that debt, cutting into profits and cash flow. Looks like REITs could be on the rebound, though, on expectation that the Federal Reserve will be cutting interest rates sometime later this year. Some REITs are already starting to enjoy a pre-interest rate bump. One REIT that took a hit along with broader sector but hasn't had any issues with its tenants and is in red both year to date and year over year is Easterly Government Properties, Inc., traded on New York Stock Exchange under symbol DEA. The reason that Easterly Government Properties sailed through the healthcare crisis of 2020 and unprecedented interest rate hike environment, the U.S. government is its biggest tenant, and if you can't trust Uncle Sam to pay the rent, who can you trust? John?
Yeah, thanks, Mo. You're right. Easterly Government Properties, Inc. acquires, develops, and manages commercial properties that are leased to various U.S. government agencies. In fact, according to the most recent data, approximately 97.4% of Easterly Government's lease income is backed by the U.S. government. The company's 90 properties are spread out across the country. Some of its the U.S. agencies that pay rent include the FBI, Department of Defense, Department of Energy, IRS, U.S. Attorney's Office, and Department of Veteran Affairs.
And despite high inflation, 2023 was another successful year.
Yeah, for the fourth quarter ended December 31st, 2023, Easterly Government Properties reported net income of $4.8 million or 4 cents per share. Core funds from operations was $30.1 million or 28 cents per share. During the quarter, the company acquired 3 properties totaling 221,463 leased square feet with a weighted average remaining lease term of 9.7 years. Now, full year net income was $21.1 million or 20 cents per share, while core funds from operation was $120.1 million or $1.14 per share. During the year, Easterly Government completed the acquisition of 4 properties and successfully renewed almost 400,000 leased square feet of its portfolio for a weighted average lease term of 16.4 years.
What can you tell us about dividends here?
With 97% of annualized leased income backed by the U.S. federal government, it's safe to say that Easterly Government's cash flow is secure. And this is one big reason why Easterly Government is able to provide investors with a safe, growing dividend. In February, it declared a quarterly dividend of 0.265 cents per share or $1.06 per share on an annual basis for a current yield, as of this recording, of 8.93%. Now, the company only went public in April 2015, but has raised its dividend 7 times since then. It held its payout at 26 cents per share throughout the 2020 health crisis and raised it to 26.5 cents per unit in August of 2021. Now, Easterly Government has actually held its distribution at that level since then. When will resume raising its quarterly distributions? That probably after the Federal Reserve makes substantial cuts to its interest rate policy. This will make borrowing cheaper and should help juice the company's earnings and enhance its profit margins.
And could we say the same thing for the DEA stock as well?
Yeah. Easterly Government Property stock has been underperforming the markets. As of this recording, it's down roughly 10% since the start of the year and down roughly 8% over the last 12 months. Again, Easterly Government has been reporting solid financial results, but because of high interest rates and acquisitions, its earnings growth have slipped over the last 2 years. In 2022, it reported a small 4.5% increase in net income. And in 2023, net income actually fell 41%. Things are looking up, though. Analysts expect 2024 earnings per share to increase to 27 cents before pulling back slightly to 25 cents per share in 2025. Still, that's a marked improvement from the 20 cents per share recorded in 2023. This is probably why analysts are increasingly bullish on DEA stock, with analysts providing a 12-month share price target of 13 cents per share. Now, analysts could update their forecast once the Fed begins announcing its first rate cut.
John, thank you so much for your insights. Easterly Government Properties is a great REIT with a rock-solid tenant base. 97.4% of its lease income is backed by the U.S. government. As a result, it clearly doesn't have an issue with tenants not paying their rents. And this provides it with a reliable cash flow, which allows it to make acquisition and target optimistic developments. And there's a lot of room for growth. The federal government rents more than it owns. And given federal government constraints, chances are good that the US government will continue to grow its lease portfolio of assets, something Easterly government is happy to accommodate. It's tracking an estimated 700 plus million of properties and actively evaluating 250 million. While Easterly government's earnings and stocks have been facing headwinds from high interest rate environment, this should change by later this year when Federal Reserve cuts its interest rates. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.